Top Glove Executive Chairman Tan Sri Dr. Lim Wee Chai and the EPF have raised their equity stakes in the rubber glove manufacturer, which had in recent days bought back more shares in the company as glove counters tumbled on vaccine rollouts worldwide. According to Top Glove's board's filings, Lim raised his direct shareholding in the company to 26.37% after he acquired 3.77 million shares yesterday at just under 5 ringgit and 29 cents each. He also has an indirect stake of 8.65% in Top Glove. The filings also showed the EPF raised its direct stake in the company to 5.93% after it acquired 1.48 million shares last Friday. Meanwhile, in another filing yesterday on Top Glove's share buyback, the company said it bought back 23.79 million shares on Bursa for 141.8 million ringgit between February 10th and this Monday. It said it paid a minimum of 5 ringgit 78 cent and a maximum 6 ringgit 15 cent for each share purchased. According to Top Glove, the 23.79 million shares, which were retained as treasury shares, brought the number of its treasury units to 202.15 million. Top Glove closed 1.34% higher today at 5 ringgit 30 cent. Maybank saw its fourth quarter FY20 net profit tumble by 37% to 1.54 billion ringgit, dragged mainly by higher net impairment losses. This caused earnings per share to fall to 13.68 cent versus 21.79 cent per share a year ago. Top line was down by 6% to 12.24 billion ringgit. For the full year, earnings fell by 21% to 6.48 billion ringgit, while revenue shrank by 3% to 51 billion ringgit. Maybank proposed a final single-tier dividend of 38.5 cents per share versus 39 cents last year. Group President and CEO Dato' Abdul Farid Alias said in a statement, the group expects this year's operating environment to remain challenging for the medium term amid the COVID-19 pandemic. The lender is, however, hopeful the economic momentum will pick up once the vaccination campaign gathers steam. Going ahead, the group will focus on growing lower-cost current and savings deposit balances to mitigate against further net interest margin compression. It will also be targeting fee-based income opportunities through its wealth management, global markets, investment banking, asset management, and insurance segments. Public Bank posted an 18% fall in fourth quarter FY20 net profit to 1.15 billion ringgit due to higher loan impairment allowance made amid the COVID-19 pandemic. Revenue slipped 13% to 4.92 billion ringgit. Earnings per share stood at 5.91 cent versus 7.24 cent in the previous corresponding quarter. It announced an interim dividend of 13 cent, up from the 8 cent the lender declared last year. As for its full year, net profit slid 11.6% to 4.87 billion ringgit. Revenue shrank 9.6% to 20.3 billion ringgit. Public Bank founder Tan Sri Dr. Teh Hong Piao said in a statement, the banking group will remain vigilant and agile in balancing growth with risks amid the prevailing economic conditions. As the group focuses on organic growth strategy in retail and commercial banking, he said it will continue to strengthen its resilient business model and core competencies. The lender believes its healthy capital position and ample liquidity buffer, coupled with its stable asset quality and loan loss reserves, will enable it to navigate through the challenges ahead. Axiata Group has agreed to partner with a company for its bid for a digital banking license. The telco's CEO Datuk Muhammad Izzaddin Idris said at the group's financial results virtual briefing that details will be announced in the next couple of weeks. However, he did not reveal the name of the company. He said Axiata also hopes to announce commercial partnerships with several other organizations. The deadline to submit applications for the digital banking license is June 30th this year. Bank Negara will announce the granting of the licenses in the first quarter of 2022 and will issue 5 licenses to qualified applicants. Axiata, which operates e-wallet Boost, is among the top 3 e-wallet service providers in the country. It's also open to applying for a digital banking license in other countries, and said nations like Indonesia and Bangladesh offer a natural extension for the telco giant to pursue such a license. On a separate note, Axiata posted a net loss of 255.96 million ringgit in its fourth quarter of FY20 on the back of accelerated depreciation and write-off of assets. Top line fell by 1.5% to 6.26 billion ringgit on lower revenues at its Malaysia, Indonesia and Nepal operations. It declared a second interim dividend of 5 cents per share. AirAsia Group has reportedly postponed its fourth quarter FY20 earnings release by about a month from initial plans to release it this evening. According to Reuters, the budget carrier confirmed that it had delayed the results announcement to the end of March. The move comes as AirAsia Japan starts bankruptcy proceedings. Just yesterday, AirAsia said its associate had commenced the proceedings as ordered by the court. It is recognizing a loss of $74.1 million or 299.34 million ringgit in the second half of 2020 due to financial assistance in the form of intercompany transactions and loans being written off, as these amounts were deemed to be irrecoverable. AirAsia also incurred $5.2 million in the fourth quarter of 2020 and the first quarter of 2021 in expenses related to aircraft deregistration to move 3 aircraft from Japan to Malaysia. It said further announcements will be made in due course on the particulars of claim and financial impact to the company, if any, under the bankruptcy proceedings.